All right, good evening, everybody. Welcome to tonight's presentation. Keep it simple, a free event for members, Tuesday, July 9th. I have the date right and everything. That's a good sign. Here is what we'll be talking about, discussion points. Why and how keeping it simple is a valid concept. Where and how some people get this very wrong. Simple can only come from a state of understanding and not from a state of chaos. Some recent chart examples to give you an example of what I'm talking about. This was a interesting presentation for me. As you know, I've been doing a lot of these, even just a DTS here for the last, coming on 2 years pretty soon, actually. For almost 2 years, I don't think I've repeated one of these really, maybe a chart lesson or something like that, but basically they've been all new topics. And the source from which I get these topics is easy. I've been working with people for a long time, and these are what I continuously see as common issues, topics, problems that I think people have in one form or another. And there's a whole variety of them. I have a list going. I probably have the next 6 or 7 topics picked out for the next 6 or 7 presentations because the list kind of never stops. There's always things, and every time I do this, there's 2 or 3 people I hear from that say, "Wow, that hit home with me. That made a difference." And it always makes me feel good when that happens. And I imagine if there's 2 or 3 that take the time to write, there's probably 10 times that many that at least got something out of it. So not everybody thinks every one of these is golden, probably, but a lot of people I think get something from these. It's funny. I got more comments than I would have believed from the thing I did about the movies. I'm not sure who I sent this to. I get mixed up who I send stuff to, if it was just the room people or everybody. But I asked people what they thought my favorite 2 movies were for trading, and I got some responses back. And a couple people knew because I have not kept this a secret. I talked about it. And I went ahead and I posted it on the website. There's a page on the website called Other Stuff. So I had it posted there. And I'll just give you, well, you can go to the website and do it, but I'll give you the direct link there. And I had more people than probably any presentation email back to me and said that the first of these 2 movies was, really game changing for them. So I was, of course, always happened to, yeah, the 21 clip specifically, yeah. So there's my 2 favorite trading movies. And no, they're not Wall Street or any of that other stuff. Those are all entertaining movies. But these are 2 movies I feel can really help you. Just make that click with you to have something help you learn to trade better or to give you that little psychological edge sometimes is all it is. Tonight was interesting. I never had such a hard time organizing a presentation. Normally, once I get the topic, the thoughts just kind of flow out of me so quick I can't even write them down fast enough. And that was the case here also. I had all the thoughts, but they didn't flow together right for me. I'm not sure if that makes sense to you or not. I mean, the presentations here make sense. But as I was thinking about the topics, as I ran through it, I came up with like a whole other set of comments that don't necessarily relate to the slide. So I'm going to do something different. I'm going to throw some comments out here before we really get going, just to make sure that these topics you're at least thinking of when we go through this, because I'm not sure the presentation necessarily hits all the topics I wanted to hit. Hey, there it is. Did that make sense what I just said? That's what I was trying to say. Did that make sense? Even though I finished the presentation, I had all the stuff in there I wanted. As I thought about it, it didn't necessarily hit all the aspects that I wanted to hit. So I kind of made a checklist while I was sitting here waiting for you guys. And so let me just kind of hit those real quick and see. The first one was what I just said, that these topics come from what I simply would consider to be the demand from you people. When I hear you send me trades or explain things to me or what you're doing, a lot of things come up that I think are pitfalls that people run into. So that's where a lot of these topics come from, number one. This topic tonight is keep things simple. And it is a serious topic. I do not mean it to be sarcastic, although through the first half of the presentation you may think that I'm being sarcastic, but I'm not. But people end up on both sides of the spectrum. And what I mean by that, and I guess this is one of the most important points, and I didn't really include it, so to speak, in the presentation, because in a sense it's obvious. On the other hand, maybe it's not obvious. But what I mean by that is there are people who get so bogged down and complicated, and just I can remember me even my first year. This is when things were still largely on paper. It was 99, and things were still largely on paper. And I can remember on my desk having it stacked with magazines and clipped out articles and paper and notes and concepts. And I remember taking a day and saying, I can't stand this, and synthesizing everything that I had down to an Excel sheet, which was kind of a mind-breaking thing. It's kind of along the same concepts of creating a trading plan, sort of, but it synthesized all my thoughts, so to speak. But I can remember at a point being so, confused and overwhelmed with all this different stuff and different avenues and different things to do and different things to look at, that I really didn't have a clear path. Believe it or not, I was doing kind of okay my first year, but I did well my first year, which is really weird. I'm not bragging about it. It's very unusual, but um, it wasn't because I didn't feel overwhelmed. So there's one class of people that I think that just get bogged down and just keep they're information junkies. It probably applies to half of you here, where you just keep reading more and taking more seminars and doing more of this and looking for more free stuff and just keep piling on the information and you end up with this big pile of stuff, but you don't know what to do with it. Does that make sense? At least what I'm saying. Not that it necessarily applies to you if you reply, but does it make sense what I'm saying? That you just end up with all this stuff, but you don't know what to do with it really. You can't synthesize it and make it productive. So that's one group of people that are on that side. And then there's the other group of people that don't want to go through the process. In other words, they just want to start off simple. They just want to step in and say, okay, just show me what to do in 10 minutes and I'll do it and I'll make money. And that's the other problem. You can't do that either. Trading does not have to be overly complicated, but it's also not as simple as just learning how to do addition or something like that. So we have to hit that balance, and that's what I tried to make tonight about, even though I didn't clearly state it, I guess, in the beginning. And I think the biggest thought I had when I was sitting here waiting, and I wish I put it in the presentation, but I'm going to type it on the screen here for you, that I think is the summary to the whole thing, but I want to type it, keep it simple, and this is like happiness, they say about happiness, right, is a destination, not an idea. Does that hit home with anybody? Does that one line hit home with anybody? It's a destination. When that hit me, it was like that is just perfect because that is really the concept tonight. Doesn't it hit home with anybody? I was really proud of that line. I have to be honest with you, because I was sitting there thinking that's the tagline I should have used at the end of the presentation. It's a destination, not an idea. It's not just like, oh, gee, I'm just going to keep everything simple and you've done it. It's not how it works. It's a process you have to earn. You have to earn the right to make things simple. It's like, a golfer. You ask any pro golfer, and he'll say his swing is the simplest thing in the world. Don't get all bogged down with all this stuff. Just go up there and do a natural, smooth swing. Well, I'm not a good golfer. It's like the only sport I didn't catch on to right away. And I have fun and I can play, but I'd never be a pro golfer. And for somebody to tell me that the swing is simple, I'd probably punch him in the face. What are you talking about? Simple swing? It's the most complicated thing I've ever seen in my life. And you call that simple? But it's like that with everybody for everything. It's a personal thing. Yeah, Keith, that is kind of the bottom line to what I said. Yeah, exactly. Um, the problem in trading is that everything looks simple at the end of the day. We all look at like, charts at the end of the day, past trades, and it always looks simple at the end because you're seeing the end product. You're seeing the end result. You're seeing the end result of a lot of work. You see one example, you go, oh yeah, boy, that's so simple. And it's like, the trade of the week videos. I have on the we have posted on the free stuff page. A lot of that is just trade of the week videos. I just leave them out there. And then there's the archive page. They go back to the first day I opened DTS, and every week there's been one. So there's like, I guess there's almost 100 of them out there if you look. And it's a double-edged sword, those trade of the week videos, because on one hand, they're a blessing to people because they like looking at them, they like seeing what you can do, they like seeing the simplicity, if you will, of the trades, the concepts, the setups. But on the other hand, part of me doesn't want them out there because they're also a burden. They're kind of a detriment in that they are what some people view as a shortcut. Like, okay, that's all I have to do is just do what he did in that video. I can do that. And you can imagine what I'm going to say next, right? I mean, people will email me. I get these fairly often. Paul, I took this trade and I was doing exactly what you did in the trade of the week video. and it didn't work for me. Did I do it wrong, or was it just one of those things that happens? And what do you think I'm going to say next? Does anybody know? Somebody who sends me a trade and says that, well, they just, copied what I did in the trade of the week video, and they send it to me and say, well, what went wrong? What's the crux of this thing I'm about to say? You can probably figure it out. No, it's not. It's not a trade your plan thing. I don't care about that. These are people who are trying to find a plan, Glenn. They're trying to find what to do. So I don't have a problem with that. No, I take every trade. Well, that's not even it either, Keith. What it is that I'm surprised nobody got this. I thought this was an obvious one. What happens is that what they send me, I look at it. Yeah, more than that, Karma, and I go, "What are you talking about? You did my trade from the trade of the week video? It's not even close. I mean, I have to ask them what were you looking at? What do you think the trade was about? What do you think the concept of the trade was? What do you think the main crux of the trade was that made it work? Because what you did has nothing to do with what I did. You see, you look at a picture of a trade and you focus on what you think is important. But behind the scenes, what went into that trade? Well, I could list 30 things for you, probably on any, well, maybe not 30, but I could list a dozen things on any trade that I thought were critical. And I'm not going to list them now because I'm going to go over it kind of in the presentation today a little bit. But all those things came together for me, and to me, it's very simple. But somebody latched onto one little thing and said, "Oh, here's what he did." They do the trade, and to me, it didn't have any of the requirements. It reminds me, of that. Um, yeah, I am going to do it. It reminds me of that story I tell because I think it's so pertinent. But just when I talk about finding chart patterns, it's the same thing. The trade of the week video. It's like when I ask them to describe what they saw in it, and they list a few things. It's like that story I tell you about if an alien came down here and you asked them to go to the zoo, and you go to the zoo with them, and you ask the alien to go and pick out a lion, and he says, I don't know what a lion is. I'm not from this planet. So you write down what a lion is. And he says it's four paws and it has teeth and it growls and it has a tail. And he comes out with the giraffe. You know, it's because he did what you said, but it wasn't even close. And to you, it's simple. How complicated is it going to a zoo and find a lion? For anybody listening to me, I don't care if you're 10 years old, it's a simple thing. Anybody can find a lion. But if you don't know what animals are, describing a lion is a very difficult job. I'm on a ramble here. I also remember something. This is kind of instilled in me in fourth grade. In fourth grade, my teacher was Mrs. Vaught. Still remember, she drove a blue Mustang. I don't know why I remember this. She was a big baseball fan. We got to watch the World Series in school because way back then, World Series is on during the day. At least this one was. We watched it during the school day. But I remember her having us describe, and what she told us to do was she told us all to write down the rules of baseball, to write down the rules of baseball. And as we did it, we started to realize while we all kind of knew baseball, even in fourth grade, and it was fairly simple, to write it down to explain it to somebody who doesn't know baseball was very difficult. And as a matter of fact, and she went through and quizzed us and questioned some of our papers. I remember this still, and went into how complicated it really was. And if you ever look up the MLB rulebook, I mean, it's hundreds and hundreds and hundreds of pages long. There's like 15 pages on the infield fly rule. It's just incredible how complicated it is. And it kind of reminds me of this in a sense, in that you can drill down and see tremendous detail. So to a baseball player, baseball's simple. To somebody who doesn't know baseball, it would take you a year to learn the rules of baseball. It really would. Anyways, we're still on the title page and it's 5:15. I do want to end up at 6. One of these I ran late. I told you I went on purpose, but I do like to keep these to an hour. So let's begin. I think I'm done with my little preamble. Simple. The definition of simple. Easily understood or done, presenting no difficulty, a simple solution, plain, basic, uncomplicated, blah, blah, blah. That's from Merriam-Webster, the actual definition. Simple as it applies to stocks. Who knows the definition of simple as it applies to stocks? I need a drink of water already. Who knows the definition of simple as it applies to stocks? You're going to love this. DTS. It would come from Cosmo. Ready? Buy a stock if it goes up. Buy a stock if it goes up, sell it. Goes down, don't buy it. That's the Yogi Berra famous comment. And that's about as simple as it gets. Yeah. That's about as simple as it gets from Yogi Berra. Ha. Where's the ha ha guy? Ha 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 ha. Anyways, seriously, let's, before I go to the next slide, I want to just verbally say something I didn't put in here. There is a book out there, an old book. I think it's by Darvis, right? How I Made 2 million in the Stock Market. Which, as I thought about when I was writing this, I think that book is remarkably on track for what I'm saying here. The point of the book, as I remember it, was that he started off in the market and he started off and just wanted to do the simple things. So he said, well, obviously, good stocks that make money are the place to be. So he went out and researched fundamentals and he lost his ass for a year. And then he, went to the next thing. He went to getting research from IBD and from Money Mag, and he lost his ass for the next 6 months. And he goes through and finally evolves himself to a technical perspective. Obviously, like I have, and probably most of you have. And it reminds me of that as well. You could take the examples, but the concept. I hope I'm not going to go into it today because I talk about it in other forums. But the concept of keeping it simple by using fundamentals is completely wrong. I mean, it's just completely wrong. Uh, you can pick your thousands of stocks, and certainly you can find stocks where it works, but you find just as many where it doesn't work. So keeping it simple in trading is a process you have to find, and it does not come about from the concept of fundamentals or earnings or anything like that. Keeping it simple as a profession. Keep it simple as a doctor. Let's take an analogy. Forget about big surgeries. Forget about ER triage. Forget about brain surgery. Why not just take care of people's skin, right? I want to be a doctor. I want to make tons of money. Let's just keep it simple. I'll just go to skin school. Keep it simple. Then you don't have to worry about all the complicated medical stuff, and you don't have to worry about years of medical school, right? Oh, wait a minute. You do. It can take about 12 years to become a dermatologist, including time spent as an undergraduate in medical school and in residency. Skin doctor has to go through everything a doctor goes through. Let me tell you a story. I want to keep it simple and impersonal. So, just a person I knew went to, it was actually his parent, went to an eye doctor because they're having trouble with their eyes. Um, the eye doctor the eye doctor diagnosed the person with multiple sclerosis. And this person had been to a doctor several times because they were having all kinds of problems. Doctors couldn't figure out what was wrong with the person. Didn't do the right tests or whatever it is. I'm not familiar with all the details. And then just went to the eye doctor because had blurred vision, and the eye doctor diagnoses this. How does an eye doctor do that? Well, because he had the full medical training and experience and whatever and did it. I don't know if that really is terribly on track with where we need to go, but it's just a concept that in any profession, you don't just jump to the big salary job. You earn your way there to some extent. Specializing is good. Specializing is very good. That's what everybody needs to do. But it doesn't mean that you learn everything you can first. You can learn everything you can, every piece of knowledge that may help you. That didn't make sense. Oh, but it doesn't mean that you don't learn everything you can first. You learn everything you can about the topic first. Then every piece of knowledge may help you. Take a quick example just because it's from the last couple of days, right? Keep it simple. Why don't you just follow the news and the economy? You can't go wrong, right? This is last, another reason I'm doing this is because it was last Thursday, and again, it cracks me up. I put this in the humorous category. Thursday, this is Tuesday, so I'd done this before today. So this is Thursday, the way the market closed. This is an hourly chart, just to kind of show you. Thursday, the market had gapped down and rallied back. And then the next day was Friday, and then there was Monday. So what happened on Friday morning is that probably the most, well, they are the most important economic numbers were announced, and they're what we call the Friday jobs numbers. They come out the first Friday of the month. And if you care about the economy for some reason, I'm not sure who would if you're not an economist, but if you care about the economy, these are probably the most telling numbers because they, reveal what employers are actually doing in terms of hiring and that sort of thing. So the Friday numbers came out. This is 2 days ago I'm talking about, right? And they were fantastic. There was concern because they looked like they were slipping, and they were fantastic. Strong job growth is back. Payrolls jump in June well above expectations, and this was touted, before the market opened. As they come out at 8:30, so this was an hour before the market opens. They were touted as being fantastic. Fantastic. The market was worried about this. This is great news. Can't beat it, right? Well, what happened? Here's the chart. We gap down and go nowhere. A loss for the day. And this is after the good numbers. And then we gap down the next day and go nowhere. That's Friday and yesterday, right? Well, how can that be? Anyone want to hazard a guess? Because again, I've done this before. This is almost comical to me. I have a hard time doing this without laughing. Without laughing. What? Right? You want to study, keep it simple, study the fundamentals. If the economy is good, the market's got to be good. Best numbers come out for the economy that we've seen in a while. And guess what? Yeah, exactly, right? Good news, the job market is solid. Bad news, the job market is solid. Well, the problem was that because all of a sudden I almost can't say this without laughing, right? And I know you're all being smart and saying, well, yeah, I mean, of course, this is what happened. But think about it. Just be the alien from somewhere else, right? For how many months? Good numbers, yay, that's what we want to see. And now all of a sudden, guess what? Good numbers are bad because good job numbers mean that maybe we're not going to lower interest rates like had been rumored. So it's like it doesn't matter what is said, right? Good job numbers, that's good news. Well, it's bad news because we may lose the interest rate lowering. But the next time it happens, good job numbers will be good job numbers. I mean, it's just a game. Again, it's comical. It's where the charts are. It's supply and demand. It's when things need to be sold for profit taking or for selling, those areas will react to news negatively. That's all there is to it. Good news becomes bad news becomes terrible news. So I just threw that in here because if there's any last inklings from any of you thinking that the economy or fundamentals will help you trade, they will not only not help you, they will hurt you tremendously. So let's go back and just take a look at a chart. So let's get back to the world that I live in and just talk about, let's keep it simple in technical analysis. Okay, let's keep it simple in chart trading. And I'm not sure how well this example makes an example, but I think it's pretty good. I think you'll get the idea. I'm going to ask for your input as we go through this. It's optional. I don't care a whole lot if you give it or not. Um, and again, when I show any trade that I do, I want it to be from the last couple days. I don't want to go back 6 years. So I try and find the best example I can. So this is from yesterday. And no news is good news, yeah. So this is from yesterday. And I picked it because it was what I would consider to be, or what I think the average person would consider to be a very simple trade when you look at the chart. And that was the name and purpose. It was not the best trade from yesterday. This one made money. It made about a day's profit, but it was, I had a trade that was better yesterday. Yesterday was a lot of fun. Today was a little more of a struggle for me. But it was not the best trade. It's not why it's here, but it's just simply a simple trade. So this is the daily chart of CCL. And this is after the day of the trade. So I had this on my watch list because it had this gap down, it rallied back, it retested this high. It wasn't a favorite thing, but you can see, if you can see even on this daily chart, you can see this is the day I traded. It gapped down a little bit. Can you kind of see that? So it came on the screen for me as one of the things I wanted to watch, and it turned out to be a favorite. It wasn't necessarily a favorite from the daily chart, so it ended up on my screen. So I'm gonna flip down to a 5-minute chart now. So this little gap down here on the daily chart, I just want to show you the daily so you see what I'm doing here. And again, the purpose is not to teach you the strategy, it's more or less to show you the concept of what exactly does simple mean. So we're going to gap, this is a 5-minute chart now, okay, 5-minute chart. Does everybody follow me? 5-minute chart, we're going to gap down to right here. That's what it's going to look like. There's the opening 5-minute bar, okay? Let me just flip back again real quick. This is the daily chart of CCL. That red bar is after, that's Monday at close. So that's what it looked like after the day I traded. So I'm going to trade it very early that day. I just want to show you it gapped down and the daily chart was kind of a bearish thing. That's why I was interested in it. So here we come on the 5 minute chart. Now my question to you is, and this is where I want you to start thinking about what is simple. I want to short this stock. And just let's just assume we all agree we want to short this. That's not really the point of the discussion. Should I be short right now? This is the end of the first 5 minute bars. This is 9:35. We've gapped below most of the prior day or all the prior day, and we have this tailing bar. Do you guys think, should I be short right now? Yes or no? There's no right or wrong answer. I just want you to, I'm going to walk through it. I'm going to walk through it one bar at a time. Well, okay, why not? What happens though, if I'm not short now, well, where would you short? If you're saying no, my question to you is, I really like this trade. I don't want to miss it. What if I do this? If you're saying no, where should I get short? Under the low of this bar maybe? Or 2 o'clock in the afternoon? Yeah, well, you're too good, Glenn. You got to wait. But even if you know that, there's still a point though, Glenn. What if it drops right now? I mean, what if it drops right now and I'm missing the trade? Do I want to miss that? I really like this trade. Where do I get short? Well, again, I don't want you to all, stick your head. I'm not trying to chop your head off if you say something, but if you're thinking, well, I want it to, I want it to drop, boom, okay, there. We just took out the low of the day, right? We took out the low of the day. Ugh. Now, if you want to get short this, be honest. If you want to get short this, if this is something on your, top 5 or 6 things you're looking at, and this happens, you're below the prior day, you're below the base, you go up and down, you take out the low, should you be short? And again, I'm not trying to, this is not me teaching you or yelling at you. This is me sympathizing with you, if that's the right wording. This is me, I'm honestly, I struggle with this every day. If that helps you. I mean, I struggle with this every day. These are not clear-cut answers. What you have to do is, well, I'll get to the point of why I'm saying all this. But I did not short it there. I did not, I'll explain why later. I did not short it there, but it's tempting. Isn't it tempting? Because if you don't want to miss this, you're thinking, oh, crap, I'm missing it. It's going to drop like a rock. And isn't that what you think, guys, though, right? I don't care if you're swing trading, day trading. This is the day trade example. But that's because you've gotten good. But I mean, for most people, you don't want to miss it, and you're thinking, oh, geez, I'm missing it. I can't stand that, right? Yeah. Well, it comes back, right? Yeah, fear of missing out, right? It's a problem. And you know what, Eric? It's not a bad thing, right? I mean, if you have a great play and you maybe should have gotten in, and it turns out to make a half a week's salary, you got to kind of look back and say, well, am I being too particular? Am I being too patient? I have to get into some of these, right? And no matter how particular you are, no matter how precise you are, no matter how exact you are, no matter how patient you are, guys, isn't there always a borderline situation? Isn't that true? Isn't there always a borderline situation? I don't care how exact and precise and patient you are. There's always that, one more penny, I would have done it. It's always that case. So you can't tell me, you just have to be totally objective. You can't do that. There's always going to be some balancing act of what you're doing, what's going on. I'll come to the list in a minute. So it starts to rally back. All right, we're retesting the high of the day. Time to short? Time to short? Retest the high of the day? You want to get it on a rally? No? Here's the next bar. Oh, the infamous doji bar testing, right? Everybody loves that term, doji. Doji bar, right? Got to get short on the doji bar, right? Man, well, look at that. We keep going higher. Well, Davis, what is confirmation to you? See, it's a nice term. It does have technical meaning, but again, confirmation is whatever you define it to be, right? Is confirmation to you taking out a tick chart pivot, or is it a new low of the day? It depends on your whole overall concept of what you're trying to do. It depends how close you are to that perfect entry. When you're close to what you consider a perfect entry to be, you may lax your standard of what confirmation is. When you're not so close to your perfect entry, you need higher confirmation. Does that make sense? Good answer. Fabio, I don't know if you got that from me or if you said that on your own, but failure patterns in the opposite direction are the best thing you can do. Yeah, absolutely. Of course, the problem with the failure pattern is, Fabio, what if you do this? There is no failure pattern. You're just gone, right? So did that, what I say, does that make sense though, guys? That, the closer you are to what you deem to be your perfect entry, the less confirmation you want. It's part of a big thing of what I teach. And the more you're taking a chance, if you will, on the entry, the more you need better confirmation to get things going in your direction. So anyways, we keep going up. We keep going up. Whoops, we keep going up. Short it now. We took out the low of that bar. Does that mean anything to take out the low of the bar? Does it mean anything to take out the low of a bar? No, not really a thing, really. I mean, it means something. Depends what it is, but it doesn't necessarily mean much. One, two doesn't matter. It's the pattern inside the bar. It's whether there's something you would deem to be a failure. Depends where it's happening. A whole lot of things. Oh, there's another little doji. What do you know? Getting more exciting. There's a little red bar. Um, and then after and guess what? This is where I decided it was time to get short, right there. And the confirmation I needed was none. The confirmation I needed was almost none. Because the entry to me was super, super special. And there I am. This is from the room post yesterday. So at under 46.89, we're right there at 40. So it was just a penny under that bar was all I needed. And it's not because it's the low of the bar that really had nothing to do with it. I had made up my mind. And actually, what happened inside this bar, I bounced off 90 twice. It hit 90, bounce, hit 90, bounce. So to me, even though that is what I would call a tick chart pivot, is very minimal confirmation. That's all I wanted because why is that all I wanted? Why was the low of the day? Remember down here, the low of the day was not good enough for me. But up here, I'm willing to do it just because it traded up and down 2 pennies. Yeah, but use English, Glenn, because nobody understands you. I do, but nobody else understands you. Yeah, it's because I came so close to what I consider to be a perfect entry. In other words, because I got in 3 cents off the high of the day, I put my stop up to what amounted to be over yesterday's high. In other words, if you go back and look at that daily chart, I don't want to flip back that many screens, but it would have mean I would have had to take out yesterday's high to stop out. In other words, at that point, I was making the bet, if you will, that once I enter that, I won't take out yesterday's high. And of course, it was good I got in when I did because then it dropped. It dropped. Called my targets, low of the day, end of the day. Target one, low of the day. That's way down here. Low of the day. This is yesterday. Again, this is not from 1937. This is yesterday. Boom. Comes down, gets my target. Um, at some point, I lowered the trail to right in here. I didn't put that post here. And then this was held until 2 minutes till close. I lowered the stop to 0.46. Okay. So what is this whole thing here for? Well, it's an example of something I did right. This is yesterday. I did it very right. You know. Yeah, but here's the point of this. We're in here under this keep it simple thing, right? Keep it simple. Now, if I just showed you this chart at the end of the day, Carmen, Glenn, Eric, Al, Davis, if I just showed you this at the end of the day, you'd look back and say, what would you say? I'd say, like, this is the trade of the week video. And I say, okay, guys, it rallied into the prior day's consolidation. I shorted it with a stop over yesterday's high. It dropped back to the low. I got a target. It went to the low of the day. I got another target. What would you say? It's a nice trade, but wouldn't you look at it and say, well, yeah, that's simple. I get that. Doesn't everybody get that? Even if it's your first week coming out of Crackerjack Trading Analysis 101, you just read the internet for 4 hours, right? Isn't this a simple trade, everybody? It's a downtrending daily. It's a downtrending pattern. Came into the quote-unquote gap fill, shorted the quote-unquote gap fill, even though it's not a strategy. And it falls back to the low, right? True? Isn't this simple? This is half of what my whole presentation is about today. Isn't this simple? Very simple, right? simple chart, right? You look at that and you say, trading is easy, right? I don't need anything. I just got to go find a chart like that, and it's very simple, right? Okay, well, simple chart. It is simple, but only if you entered it properly. Remember, I walked through with you guys the entry, bar by bar, right? Now, I know you're all typing on the screen professionally but in the real trading day, how many of you would have been sucked in here, here, here? And if you got sucked in, maybe you still lived, maybe you're still okay, but maybe you stopped out. And once you stopped out, you got mad. What do you do when you stop out of a trade? You get mad, you take it off your screen, you never look at it again, right? And then at the end of the day, you look back, you go, OMG, what the heck? And then you come up with all these great ideas. I'll never take stop losses again, right? Long the fourth bar. Well, you could have made some money on that too, Davis. I mean, that's a valid concept, possibly. There's 100 ways to skin the cat. The point of it is you have to find one of them. So simple chart, but only if you entered it properly. And simple chart only if you had it in the screen in the first place, right? There, there's there's what? There's 2,000 stocks that you could swing your day trade easily, maybe 3,000 swing trading, and there's probably 800 stocks that you could fairly easily day trade. At least 400 of those are very, very liquid that anybody could day trade. Why did I have that one on my screen in the first place? Isn't that part of the whole thing? It didn't just pop on my screen out of nowhere, right? Right, Glenn. Why was it there in the first place? And then not only that, but how about knowing where to exit? I mean, a lot of people get in trades and they say, "Oh, yeah, I made some money, I made some money, I made some money." Oh, you made money in all these trades. How you doing? Well, I broke even this month. What do you mean you broke even? Well, I mean, most of my gains were kind of smaller gains, and then I had a couple of stops that kind of wiped out the game. See, the other part of it is when you have a good trade, you have to make it pay you, and this is the problem people have as well, right? So all of a sudden, all this stuff becomes not quite as simple. Let's look at it in a little more detail, even, right? It's a very simple chart, simple trade. Couldn't be any simpler, right? But to make money on CCL, I had to have CCL on my screen when the market opened, right? Well, technically, I could have pulled it up at 10 o'clock. That's when the trade was done. But, you know, I, it could have been an earlier entry. In other words, I had to be watching it at the right time, right? It was not the only symbol on my screen, by the way. Because what if CCL would have dropped? Remember that first red bar on CCL, the second red bar? What if that would have just fallen from there? Serious question. What would have happened if it just fell from there? Here I have CCL, one of my favorite trades. I wait for the entry, but it doesn't wait for me. What would have happened? I'm walking you through the thought process of a trader during the trading day. What would have happened? I'll get to. I see your question, Keith. I will get to it. If I don't, please remind me. I understand your question. Yeah, I would have missed it, and then I'd have to look at the next symbol, right? Well, what if CCL is the only thing on my screen? I'd have nothing to do. I'd have to go out to lunch early, right? So the point of it is that I didn't know CCL would be a trade. I didn't know that would be my trade that day, right? So I had to have other things I'm looking at. So I have all these things on my watch list. I have these things that I think are likely could give me entries the first 30 minutes. I have to watch them. And then the ones that cooperate with me are the ones that I do. So I have to have that all organized and prioritized. Does that make sense, everyone? And let me pause a minute and comment on two of the things you said, Rick. Somebody asked here, I'd be mad. You can't be mad, Bob. Can't be mad. You can't be mad. There's nothing to be mad at. You can only, I mean, these are charts. They're doing what they're supposed to do. Some wait for you, some don't wait for you. You have to know what you're looking for, be organized, and then have the backups. And yes, there are some mornings where everything gets away from me. I have nothing to do. But if you have three or four or five things that you're looking at all the time and you're waiting for a certain entry, and you usually get one of them. Most of the mornings I will. But you can't get mad at missing one because what if you got in and then it stopped you out? Then you'd be happy that you didn't take it, right? You can't have it both ways. So you have to follow what it is that you do. And if over time what you do is wrong, you adjust it. It's called, following a plan to what you do. Let me get this other question here. Let me read it for people who are listening to a recording of this. Can simple be a single symbol like gold or a watch list of 20 stocks only? All right, to make the answer, that's Keith's question. Keith, to make the answer simple to you, let me say no. That's not what simple is. It's a different way of trading, so to speak. It's a different concept. Yes, you can do it, and yes, that would be simple in a sense, but you can be simple without doing that. See, one thing that I believe, and as you know, I've said this before. I mean, I like trading futures once in a while, but I cannot just sit there and just trade the futures because I am not patient enough to do that because it's one thing. If you miss it, it's done. Same thing with if you trade just gold, Keith. It's one thing. If you miss the setup, you're done. You're done, right? And then you have a choice. Either you push the next entry or strategy more than you should because you're desperate to do something, or you do nothing, right? Does that make sense what I'm saying, everybody? And I'm not saying there's anything wrong with doing that. There's nothing at all wrong with being so focused that you're looking at only one thing. But you have to have the patience to do that. I don't like that. The concept I like is kind of the more you put in the top, the more you can get out of the bottom, right? So if you're going to come to the market with 20 stocks on your list, Keith, which I agree with, right? But they shouldn't be the same 20 every day. At least this is my view. You don't have to do this. This is not a rule that you can be very successful not doing what I'm saying right now. But to me, if you come with the same 20 stocks, you could look at them all and they're all doing the same thing. And even if you pick a variety, what I like to do is pick a different 20 stocks every day by scanning the daily charts and the hourly charts and finding those setups that are most conducive for that day as a day trader or for that week as a swing trader. And then focus on those 20 because I've already narrowed the list down to things that have the parameters that I think may work. Does that make sense? So I don't think your question encompasses what I mean by simple. Yes, it does accomplish the job as simple, but at a big price. And again, I'm not saying that's wrong. It's not my style because it's too high of a price to pay to get simple. You can be simple without doing that. Does that make sense, everyone? Anyone? Almost feel like I'm talking a little esoterically here, but make sense? Did I answer your question, Keith? All right. So back to simple trade on CCL. So I had to prioritize what I wanted to look at. I had to decide the balance between missing the position and patience if it did set up better. And I talked about this. I don't think I'm going to go over it anymore. I talked about this, right? It opens. I like to see it rally. It starts to fall. Decision time. Is this close enough to my entry that I'm willing to take it here? What's the trade-off? Well, the good side is if it drops, I'm in it. The bad side is if it comes back to the entry that I envisioned, I'm going to be really mad because either I have to stop out of it or I'm going to be sitting with it all day just to break even, right? So I have to make that decision. How does one make that decision, by the way? How does one determine the balance between missing a position and patience to wait for a better setup? How do you determine that? Yeah, in advance, fine. You can do it in advance. How do you determine it in advance? Is there some formula that you read somewhere? Does the chart produce a little green star when it's ready to drop? Or okay, but even in a trading plan, how do you write it into your trading plan? See, the trading plan is a famous catch-all answer for people, but then I always say, well, okay, fine. You're writing your trading plan. How do you write it into your trading plan? The question at hand, folks, is the last line up there. The balance between missing a position and waiting with patience for a better setup. How do you determine that? Well, sure, money management helps you make the decision. Absolutely, David, sure. Because if you get in down there, you have a choice between either using the high of the day stop and possibly stopping out or using a really wide stop, but then not making much money because your stop's so wide, right? Actually, Keith, I can't. Keith's saying pre-market open and current price action. I actually firmly disagree with that, Keith. A pre-market price action is worthless to me. I've looked at hundreds of charts and I've determined without even hesitation that on balance it's worthless to look at pre-market charts. Clear rules? Okay, but how do you make the rules, Eric? How do you make the rules? And here's the truth of it is you're sitting there at 9:35, 9:45, 9:55 in the morning and it starts to drop, and you have to say yes or no. There's two words that nobody is really, yeah, the entry is everything, but the words that I'm getting at kind of are experience and confidence, right? Isn't that part of it? The confidence to know to wait for an entry, the experience to say, hey, I don't mind missing this, I'll get something else. That becomes part of it, right? Doesn't it? True, everybody? Is that true or not? I'm asking you for a reason because I'm going to have a comment after this. Yes, Eric, I agree. Rules are pre-established. I agree. But how do you make those rules? And how do you interpret them in the heat of the moment? I don't care how precise your rules are. There's always going to be that borderline thing where you have to say, even if you have a rule, Eric, you have to determine where exactly does it need to rally to for me to short it, and what setup has to occur for me to short it. And then if all that happens and everything's perfect, it comes up 1 penny short and starts to drop, do you say, good enough? Right. Experience, practice. And my point of that is, how do you get experience in practice if your whole rule of thumb is nothing but keep it simple? Did that hit home with anybody at all? I'm not trying to sound like some preacher here or something, but it's just the realism of trading. Did that make sense at all? That hit home with anybody? And by the way, I am going to advocate for keeping things simple. This is not a sarcastic presentation. Please understand, it's not a sarcastic presentation. I do want to evolve around in a few minutes about keeping it simple, but I want to just show you first that the simple concept of, remember I said there's two extreme people. There's people that keep it so complicated they need to make it simple. There's people that just want to make it too simple and never learn, get the experience, never learn really what they're doing, right? Trading simple to make money on CCL. I also had to pick a stop that would keep a good position live if it worked, but would still make money. Now, of course, this is stuff that's pretty much pre-planned, right? It's in your plan where you're going to do this, but nevertheless, you still have to come up with a balancing act of where that stop should be, where you're not getting stopped out all the time, which is what most traders do. They stop out too often. And also where it's not so crazy far away that you can't make money, right? Another balancing act that you have to do. Jay, what percentage of your trading plan cannot be written down? What percentage of your profits come from close call subjective decisions? That's a great question, Jay. I've addressed this before. I don't think I can tell you a percentage. But what I've said is this, Jay, and maybe this will answer your question, let me know. When people come to trading initially, they're 100% subjective, right? Jay, it just, that stock can't rally more. Oh, that consolidation has to go higher. They had good earnings, it has to go higher. It's all subjective. That's all that is when you start. And then, of course, your goal, learning technical analysis, is to become as objective as possible, to see the chart through objective eyes and come up with strategic concepts of entry and management where you're taking, but nevertheless, there always will be some subjectivity. In other words, two identically great traders could disagree on the exact entry on a particular setup. One could, like Davis said, he could have gone long that stock I shorted up to where it rallied and made money, and I could have decided to short it there. Great traders can have different views, and by definition, there will always be some subjectivity in the market because the market is a zero-sum game. There is no such thing as an algorithm that trades the market perfectly, because if there was, we'd all use it and we'd all make money and nobody would lose money, and that can't happen. There's always going to be that battle. So there's always going to be some subjectivity. And I think all you can do, Jay, is get your plan as objective as possible, follow it as much as you can, and in the heat of the battle, what I like to say is, we turn over some small decisions to the idiot. Here's another way to describe it, Jay. If you were to make your plan 100% objective, it would probably be 100 pages long. By the way, I have a folder full of hundreds of trading plans people sent me over the years. I have a guy who sent me a 97-page trading plan, which in a sense probably became worthless to him because he couldn't follow it, right? And that's the problem. You can't take it to that extreme because it becomes almost impossible to follow. So what we do is we take it to the 90th percent level. I always use the example of, you during the day as a day trader are an idiot. Not you personally, me, everyone listening is an idiot during the trading day. So we need to send ourselves instructions during the day of what to do. It's just like you have an employee. And the example I always use is like, well, if you're an employee on an assembly line at Ford, well, here's exact instructions of what you do. The cars are going to come by. The door will be lowered by this mechanical arm. You hit this button to move the door into the position. You take this drill will come down. You take the three screws in your right hand. You do this, you do that. And all that has to be done. We wouldn't let the employee put two of the three screws in and call it good, right? We wouldn't let the employee put the hinge in upside down. That wouldn't be okay, right? But can the employee use his left or his right hand? Okay, who cares? Should the employee stick the screw in the hole first or put in the drill bit first? Who cares? You see what I'm saying? And it's kind of what you have to look at trading as being. And yeah, how do you get the balancing act, Jay? You do it by checking what you do at the end of the day. And at the end of the day, if you have a bad trade and you say, you know what, that was not substantially what my plan said to do, you're becoming too subjective. Does that answer your question 100%? I actually think I did a good answer there. It was a great question, and that's why I wanted to take the time to answer it, even though you're going to put me over the time limit here. Does that make sense, Jay? Well, positive, okay. Positive confidence from positive cast experience, sure they'll help. Hopefully you caught my point there eventually, Carmen. Make things simple through analysis of trade. Yeah, analysis. Yes. Yeah, that's true too, and it's why part of your analysis at the end of the day, at the end of the week, as a swing trader, is not just to find your mistakes and find when you became too subjective, to follow up on what I just said, but it also is to find those great examples of where you did exactly what you wanted to do and ingrain them in your brain to give you the confidence to do it right next time. This is the other part of the process. Simple, getting things where I'm not trying to look at too many. Simple to me is getting things to where I'm not trying to do or look at too many things at one time. I can do better. Yes, I agree, Davis. Um, there's still a process though to get to looking at. If you're not going to look at too many things at one time, what are you going to look at? So there's still a process involved. It's still the same process, and whether you want to end up looking at two things during that half hour or 12 things during that half hour, that's a personal choice, and that's fine. And you adapt to it, but we still have to all go through this process I'm talking about. So I had to pick a stop, et cetera, et cetera, et cetera. To keep trading is simple. To make money on CCL, I also had to determine if the market mattered. Did anybody even talk about that? Did the market matter in this trade? And if it mattered, was the market timing appropriate at the time I shorted the trade? In other words, if CCL is kind of a market stock, as Carnival Cruise, and the market had fallen for 30 minutes, and I went to short something and the market hit support, would that make sense? Does that affect my trade? This is sounding not so simple anymore, right? I had to determine if I wanted the entry confirmed. I'm not going to go into detail about what that means. It would be pointless. But the point is that even upon entry, I have to say, well, what are my requirements for entry up here? In other words, every time that stock ticked higher, see if this makes sense to you. Every time that stock ticked higher and I wanted to short it, my entry requirements became somewhat less. Does that make sense? So that's a constant balancing act on the way up. I had to know the right zip code of where the target might be. So I go through all this trouble, I get in, I get short, and I make a quarter of what I lose on a trade. What good did that do me, right? When you get a winning trade, it has to pay you. And that's part of the problem a lot of people have, that the winning trades don't pay them. Would you have been able to sit with that trade to the end of the day? I don't have any problem doing that. I like doing that. And perhaps most important, besides knowing all that, I had to do it. I had to have the confidence to enter and manage it properly to decent targets. Hey, these are good slides. And then I cheated here. When I do these, I kind of copy and change prior slides. And this is here from last week during the psychological, Let's Talk Psycho was last presentation's topic, and this was in there. And this is my definition of trading, which I think is always good to remind you of because I think it contains some valuable words in here. Trading is having the knowledge to know when the odds are in your favor, the patience to wait for that moment, and having the discipline to handle the trade properly when it goes in your favor or against you. Okay? So, what was the point of all of this here? Trading is simple, but to make money I had to do this, this, and this. Well, the point of it was, if we go back to that chart, and I said to you, hey, if you looked at this at the end of the day, it'd say, yeah, that's a simple trade. Anybody can do that. But you're seeing the end result of an awful lot of work. I don't want to scare you if you're new to this, but does that make sense? Does that comment make sense? You're seeing the end result of a lot of work. You're just seeing the finished car roll off the line. You go, oh, a car. Anybody can make a car. Stick an engine in there, four wheels, four tires, you're done. Four wheels, four tires, four doors, you're done. Well, there's a lot of stuff that goes into it, and you have to get how to do it. Now, once you get how to do all that, yeah, we want to boil it down and make it simple. Let's go back to where we were, because we're in the closing. I'm not going to be far over here. Boom, boom, boom. You may think this is turned sarcastic, but it has not. I do not mean this to be sarcastic. I do want and intend trading to be simple. You should strive to make everything simple. But like the opening slide said, simple only comes from a state of understanding, not chaos. And here is, I think, a key line. You must first understand everything to boil it down to what is simple to you. Does that make sense? I have two reasons why, but does that make sense? You have to, nothing can be simple unless you understand everything and then boil it down to what is simple for you. Otherwise, it'll never, ever be simple. And there's two reasons. Number one, the dermatologist, right? I don't care if you're just working on skin. You need to know everything there is about the human body, heart, disease, blood type. You need to know everything that a heart surgeon needs to know before you're allowed to touch somebody's skin. Why? There's a reason for that. It's the same thing as a trader. You need to know everything that's going on out there so that you can then boil down to you what is very simple. And here's the other reason. It's called the grass is greener. I sent you, all members about a month ago, I sent you an article called The Grass is Greener. And I think it's a great article for trading. And if you don't first understand everything, you will always look elsewhere the first time the cookie crumbles a little bit. You have to have confidence that you know what you're doing and what you're doing is what you want to do. Otherwise, in the article I sent, it was a rather lengthy article. If you didn't get it, if you email me, I'll send it to you. I'll probably post it on the site, to be honest with you, because I think it's a worthwhile article. That's why I sent it to all of you. And it's something I just kind of wrote spur of the moment, but it just discusses the fact that if you just step in and just kind of learn one thing, the first time you have trouble, you're going to look somewhere else, right? I was, day trading bullishly tech stocks. Yeah, it started not working that good. Now, maybe it didn't work that good because you were just missing something. Maybe you had a bad day, maybe whatever. But now you go, you know what? A friend of mine is shorting cryptocurrencies every day. I think I ought to find out about cryptocurrencies, or I think I ought to find out about Forex. You know what, guys? Cryptocurrencies, Forex, the market, stock symbols, you know what? They're all exactly the same. They're all exactly the same. It doesn't matter. Nothing. Does anybody here think, answer me please, does anybody here think that if you don't know how to trade tech stocks, that you could go trade Forex? Does anybody here think you can do that? Is there anybody here in the right mind that can tell me that if you change the entity that you're trading, that you'll make money? I don't think you could seriously say that, right? But yet people do this all the time. I'm not having any luck in stocks. I'll try Forex, or I'll try this, or I'll try that, or these emails that come around. Oh, you got to trade cryptocurrency because it's easy. Wait, what do you mean? It's still a chart. It's still price action. People get sucked into thinking you need this huge volatility to make money. You don't need huge volatility. You just need to know where to get in, where to get out. That's all you really need. So the grass is always greener will be a problem. This is the last slide, I think. Even when you know, Eric, even when you know how to trade tech stocks, you still have trouble with Forex. Well, I mean, obviously, when I say there's no difference, obviously, I mean, points, pips, cents. I mean, obviously, there's technical little things, but none of that matters in terms of making money. The moving averages don't matter. Don't tell me you need a different moving average for Forex than you do from stocks, because you know why? Because I don't care what moving average you use in stocks. It doesn't matter. It's not the point. A moving average is not a magical thing. So People are all hung up on this stuff. None of it matters. None of it matters. You should have a chart in front of you and know what to do with it. Now, what you need to have is you need to have multiple time frames. You need to have a cross section of the times in at least 3 or 4 different time frames. But once you have that, you should be able to know whether to leave something alone, be long or short, and where. And it doesn't matter at all if it's a stock of Xilinx or if it's a forex pair or if it's the market itself. None of that should matter at all. Before I get to the final slide, does anybody have any questions you want to go over before I make the final point? Just taking a look here, coming up. You know what I was thinking of having? I was shocked, but a month ago or so, I did a Saturday coffee with Paul Saturday morning. It was like one of the most popular things I ever did. I don't know. I don't know if it's because it was Saturday or because he liked the idea of having coffee with me. I don't know what it was, but so I'll probably schedule another one of those. It seemed to be fun. So it'd probably be a week from Saturday. I don't think I'm going to do that this Saturday. It just comes more of a. I had a couple topics to talk about, but it was a very loose conversation. It was more of a question and answer, talk about things. We talked about the market quite a bit. So I'll probably schedule one of those too. I'll let you know. But there's nothing else coming up this week on the free stuff calendar. For you seminar people, we are having a practical application review day on Thursday, not tomorrow, but Thursday. Okay, you got one email about that. I'll send you another. So simple, bottom bottom line. There's a difference between simple and lazy. I think that's the bottom line. If you want to reduce it down to English language, simple is learning everything you can about a topic, then mastering the area you like best. It will then be simple to you. Lazy is, well, just lazy, right? As you guys know, if for some of you, I know there was a lot of you here today. For a lot of you who, when you're ready to get into it, to me, the way you learn everything is to take the seminar program that I offer here. It's a nonstop program. You have my commitment to make sure that you understand this stuff, whatever it takes. Unlimited retakes, coaching with me, whatever it is you need to get the process done. I've had a lot of people that have been through and are doing well and on their own, and a lot of people at that point right now is starting to do really well. Not this weekend, I'm busy. Well, I think you're going to be in luck, Carmen. I think I'm going to do it the 21st. Yeah, the 21st. All right, guys. See you next time. For those of you available during the day, come join us. Take a try on the trading room if you want. Otherwise, I'll see you guys at the next event. Have a good night. Take care.